I look to the fact that the big money is accumulating silver, and it's very counterintuitive. It's being held down even when we didn't see a recession on the horizon. So I think it's one of these deals, Kai, where you can only suppress a market over an extended period of time by pushing it in the direction that it is going. For a very long time, no one cared about gold or silver. They just wanted treasuries and US-based securities and real estate. No one cared about it. Things are changing, and I think silver will have its day. And you can see that by a country like India, who purchased so much silver over the last 2 years, or China, who's been buying it, or all of these countries slowly draining the exchanges. Silver will have its day. And the fundamentals, I think, speak to that. I guess we'll have to see how it plays out.
The narrative surrounding a potential shortage and manipulation in the silver market has persisted for decades, with the metal experiencing a notable price surge to $50 in 2011 before undergoing a significant decline. While gold has seen recent rallies, silver's price trajectory has been less robust, struggling to recover fully from its previous downturn. AndySchectman, CEO of Miles Franklin, suggests that the apparent suppression of silver prices conceals its true value, attributing this phenomenon to market manipulation. Despite these challenges, Schectman highlights significant interest and accumulation of silver by major investors, hinting at the potential for future price appreciation. The Silver Institute, based in Washington, projects a bullish outlook for silver in 2024, forecasting prices potentially reaching 10-year highs. The organization attributes this optimism to anticipated strong industrial activities worldwide, driving demand for silver as manufacturing ramps up. Historically, silver has played a pivotal role in global trade, with significant quantities flowing into China during the Ming and Qing periods, sourced initially from Japan and later from the New World. Andy underscores the growing interest in silver, particularly from countries like India and China, which could further bolster demand and prices in the future. On the supply side, global mined silver is expected to decrease by 2% year-on-year to 820 million ounces, largely driven by reduced output from operations in Mexico and Peru. However, Andy raises concerns about the Silver Institute's supply-demand statistics, criticizing the omission of silver's utilization in military applications, alongside its increasing importance in green energy, digital technologies, and military advancements. Join us as we explore the insights shared by AndySchectman. Stay updated by subscribing to our channel and activating notifications.
When we talk about the price, right? The price of silver on the last day of the year in Shanghai was $2.25 higher than it was on COMEX, a 10% difference in price. So, when you talk about the real value of silver, they're slowly turning up the heat in Shanghai, where they're creating an arbitrage event where traders in London and Chicago and New York will buy silver off of the COMEX and the LBMA and deliver it for an arbitrage of over 10%, which is big in the arbitrage world in Shanghai, and ain't never coming back at that point. So again, the suppression of the price is masking the real value. But when you talk about recession, I don't know if I want to lump silver into the Dr. Copper story where it's showing us a recession is coming. I would rather point to the inversion of the yield curve, which 11 out of the last 11 inversions has been a precursor to a recession. So to me, technical analysis or looking at silver in that way in a rigged market sends maybe incorrect signals. I look to the fact that the big money is accumulating silver, and it's very counterintuitive. It's being held down even when we didn't see a recession on the horizon. So I think it's one of these deals, Kai, where you can only suppress a market over an extended period of time by pushing it in the direction that it is going. And for a very long time, no one cared about gold or silver. They just wanted treasuries and US-based securities and real estate. No one cared about it. Things are changing, and I think silver will have its day. And you can see that by a country like India, who purchased so much silver over the last 2 years, or China, who's been buying it, or all of these countries slowly draining the exchanges. Silver will have its day. And the fundamentals, I think, speak to that. I guess we'll have to see how it plays out. I want people to understand that when I sell gold and silver, I don't sell it as an investment. To me, it's wealth. It's been wealth for 5,000 years. But when you look at silver, both its supply-demand fundamentals, its price historically, its relationship to gold, its expanding utilities in green and digital applications, not to mention military applications, which ironically, the Silver Institute omits from its supply-demand statistics. Yet one of the guys in my show here just the other day came up to me specifically because last year I said there's 500 ounces of silver in a Tomahawk cruise missile. And he just came up to me and said, listen, I was on that program. And this is all declassified, what I'm going to tell you, he said. And he showed me pictures. He said, once you know, you're right. There's almost exactly between, I think he said 15 and 16 or 16 and 17 kilograms of silver in the tip of a Tomahawk cruise missile. And he showed me all sorts of pictures, said, you're right. And it's not just Tomahawks. It's all the high-tech weaponry and aerospace and all of these things where copious amounts of silver are used, yet the Silver Institute ignores it. Ask yourself, Kai, why would 4 or 5 commercial banks have the U.S. or Western-based commercial banks hold the largest short position in any commodity traded on COMEX? Why silver? Why it's as dumb as a mud wall when you think of it logically. Why? Gold is running because gold's not used in military applications, and if it is only a very small amount, but why would they short the hell out of a commodity like silver at a time when a country like India over the last 2 years is about 400 million ounces? That's more than's on COMEX. So the point of it is that, again, Occam's razor, what's the most logical answer? Well, that's to me it. When you look at the supply-demand fundamentals from the Silver Institute, they'll tell you that solar panels was the biggest use. No, it's not. It's military applications, which, strangely enough, is omitted.
Amidst growing speculation surrounding China's motives, the country continues to reduce its holdings of U.S. treasuries, reaching the lowest level in 14 years by the end of August. The decline has accelerated, with China's balance of U.S. treasuries dwindling to $805.4 billion, marking a significant 40% decrease from a decade earlier, as reported by data from the U.S. Treasury Department. Once a prominent purchaser of U.S. government debt, China had amassed substantial holdings, positioning itself as the second-largest foreign investor in U.S. treasuries after Japan. However, recent trends indicate a departure from this strategy. Andy, among others, foresees a paradigm shift away from traditional debt instruments, such as treasuries and bonds, towards tangible assets like gold, silver, copper, and other commodities. This shift reflects a broader trend towards seeking alternative stores of value perceived as more reliable than government-issued debt. Let's get back to the interview.
A lot of things that are happening around us, socially, morally, economically, culturally, where things are being chipped away at whitewashing, if you will, whether it be culturally, whether it be economically, whether it be the judicial system, whether it be the mismanagement of the dollar. All of these things, little by little by little by little by little, are chipping away. And the question is, when is that all at once moment? Whether you're talking things like cancel culture, like censorship, like the questions surrounding the elections, where a third of the country believes that they weren't fair, whether you're talking about the way we're perceived globally, or the mismanagement of the dollar, or the growing coalition of countries, BRICS, and all of these things that are little by little chipping away at the culture of this country and of potentially the world reserve currency. So I find it to be a very appropriate way of describing, in my mind, the world that I see. Zoltan Pozsar is someone who I think is one of the smartest guys in the world. He used to work behind the scenes at the New York Fed. He understands the plumbing of the system, maybe better than anyone. And he talks about this being Bretton Woods 3. Where Bretton Woods 1 was when we took over for the pound sterling at the end of World War II. And Bretton Woods 2, loosely, basically, was when, after we closed the gold window, we became the petrodollar. Bretton Woods 3, he says, is a system that will be denoted and denominated by, or described by, rather, transparency, maybe blockchain, and commodities. So I think we are heading away from debt instruments and opaque debt instruments at that, like treasuries and bonds, which have been shed by a lot of the wealthy countries in the world who are selling bonds and treasuries, and into things like commodities. And it doesn't just have to be gold and silver. It could be things like copper, it could be uranium, it could be liquid natural gas, it could be oil, it could be farmland, agricultural ETFs. It's things that are tangible that you need instead of promises. If you think, Kai, a bond, which is in essence debt issued by a government or a corporation, has a very short time frame of it being considered an asset in the world stage. And so I think whether you're talking gold or any commodity, I think Zoltan is right. This is a system where transparency and commodities will be the way to, or the pathway, I think, to, in terms of the next level of opportunity and investment, or the next thing is commodities. So broadly diversify within the primary trend, and to me, the primary trend is of rising commodity prices. So broadly diversify within that sector.
Silver prices remained steady, hovering around $22.5 per ounce, as trading activity remained subdued during the Lunar New Year celebrations. Investors maintained a cautious stance ahead of a week filled with key economic releases, including data on U.S. consumer and producer inflation and retail sales figures. Considering its historical price movements and recent struggles, how do you perceive the ongoing debate regarding the potential shortage and manipulation in the silver market? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.